Hey gang, Dennis Tubbergen here with another economic update. Today is Tuesday, May 1. I was reading Jim Willey's April newsletter called the Hat Trick Letter. It's a terrific publication. If you're not reading it, I would encourage you to do so. He drew my attention to this piece by David Stockman, and it is spot on as far as where we are today. This was published almost a month ago on April 4. And I'll give you just a bit from the article here. It says, with his China trade wars tweet this AM, the Donald has proved once again that he has an uncanny ability to get to the heart of matters, even if by sheer accident. Here's the tweet. We are not in a trade war with China. That war was lost many years ago by the foolish or incompetent people who represented the U.S. Now we have a trade deficit of $500 billion a year, with intellectual property theft of another $300 billion. We cannot let this continue. Now, Stockman says that this trade war, or these foolish or incompetent people that President Trump tweeted about, are not defunct Commerce Department officials. It's not, as he puts it, the pointy-head bureaucrats at all. He said the actual culprits are the Federal Reserve. He said, in a manner of speaking, free money has trumped free trade. And what that means is that this cannot be fixed today because we lost it a long time ago, and here's why. He said this red Ponzi, interesting choice of words there, is an absolute freak of economic nature that has laid waste to much of the U.S. industrial economy. But the dark secret, unbeknownst to the Donald and the Wall Street Washington establishment alike, is that the China monster was enabled, fostered, and fed by the Federal Reserve in pursuit of an upside-down monetary policy after 1987. Now, Stockman goes on to point out that at that time, the Chinese leader ordered a 60% depreciation of the yuan, the Chinese currency, and basically that was to take advantage of what the U.S. was doing with printing money. Now, Stockman says, and this chart is amazing, if you take a look at imports of goods from China, it has increased almost 100-fold. It's gone from 490 million in 1987, that's monthly, to 48.2 billion in November of 2017. So in a 30-year time frame, Chinese imports exploded by 100 points. Now, Stockman says this chart, this purple chart you see on the screen, would not have happened in 10,000 years under a regime of sound money and honest price discovery in the capital markets. To the contrary, China's initial advantage in cheap labor would have led to a large inflow of reserve assets to China and a large outflow from the U.S. That would cause wage and cost inflation in China and deflation in the U.S. It's an important point to get. I mean, if you start buying a whole lot more than you sell, then all your resources are going to buy this stuff, and those resources end up in the country of whomever you're buying stuff from, and that creates wage and cost inflation in that country, in this case China, and deflation in the United States. Stockman says, stated differently, when coupled with sound money, the free market is not suicidal. Instead, current account imbalances get settled via the movement of true reserve assets. That settlement process, in turn, causes domestic interest rates to fall and credit to expand in the case of inflows, and the opposite to occur in the case of persistent trade deficits and reserve outflows. Here's the point. The Fed never let the deflation happen. Instead, they kept inflating the bubble, and inflating the bubble. And Stockman points out, this chart represents a 17% compound annual rate of growth for 30 years running. 17% compound annual rate of growth for 30 years running. It's the work of free money, not the free market. He is absolutely on target here. I don't have any more time to talk about this today, but here's the point. There is a reset coming. When you see a chart pattern here that is this parabolic, you know that a correction is coming. It will be a reset, and that's why we have advised everyone to think about and consider seriously diversifying out of U.S. dollars in your portfolio. That's today's economic update. I'm Dennis Tubbergen.